Good day to everyone joining us from around the world. Whether you're just waking up, midway through your trading session, or winding down for the night, welcome. On behalf of the entire WeMasterTrade team, we are truly pleased to have you here with us for this global live stream session. My name is Vincent, and I will be guiding you through this exciting 2-hour journey as your host. Today's live stream is not just a presentation, it's a conversation. It's a window into the engine room of one of the most fast-growing and forward-thinking funded trading firms in the industry. And of course, I'm not here alone. I'm joined by two remarkable guests who has helped shape WeMasterTrade represent today. Skilled traders, mentors, and role models within our community. First, let me introduce the ever-composed, always insightful Raf. Welcome, Raf.
Thank you so much, Vincent, and hello everyone, and thank you for spending your time with us. I'm truly looking forward to today's sessions. There's so much to cover, not just about trading strategies or rules, but about the full ecosystem that WeMasterTrade offers, from how you start, how you grow, to how you earn. This is the kind of platform that doesn't just fund traders, it builds traders.
Absolutely. And next to him is someone who brings sharp analysis and clarity to every chart and conversation. She's strategic, she's sharp, and she's a real force in our trading space. Please welcome Daisy.
Thank you, Vincent, and hello to everyone in the chat. I'm genuinely thrilled to be here. What excites me most today is that we are going to unpack everything, not just what WeMasterTrade offer, but how traders can truly take advantage of each part of our system, from packets to promotion to scalings and long-term profit sharings. If you ever had a question or even doubt, today is the day to ask them.
And that's exactly what we are here for. Whether you're brand new to WeMasterTrade or already a part of our funded trader program, today's live stream is going to give you the full picture, not just the highlight reel. Over the course of this session, we're going to walk you through what WeMasterTrade truly is, what we believe in, how our programs are designed, and we were doing things differently from traditional broker or prop firms. Now, I want to be clear, this isn't about sales, this is about understanding. We want you to know what you're signing up for, what kind of structure support your journey, and how you can use that structure to not just succeed, but scale.
And speaking of the structures, we will begin by sharing the story behind WeMasterTrade, how we were formed as a funding project, not a broker, which is very important in detection. Unlike broker who profit from volumes or loss, WeMasterTrade is built on the belief that your success is our success. We invest capital in traders, cover the risk from them, and save profits only when they do well. That's the foundation.
Exactly, and from that philosophy flows everything we offer, especially our trading packages, which we will be discussing in detail. We will explain the logic behind each one, what kind of traders they are designed for, and how the structure changes depending on whether you choose the challenge model or instant funding model. So, if you have ever looked at our packages and thought which one is right for me, today we will answer that.
And more than that, we also do a live comparison between packages. We break down pricing, account size, maximum drawdowns, consistency rules, and even payouts, side by side, to help you make a fully informed decision. It's one thing to see numbers on a website. It's another thing to understand the intention behind them.
Right, and once you understand the pockets, the next questions is always how do I stay compliant while trading? So we will move naturally into discussing trading rules, which honestly is one of the most important parts of today's section. We will explain the daily loss limits, how it's calculated, what is include both close and floating profits and loss, and how to avoid violating it, especially overnight. We will into the maximum total loss, the consistency ratio, and we will even address common misunderstanding about trade seasons and risk purchase policies.
And we won't just explain rules in isolation, we will explain them in the context of live trading decisions. I will share some personal examples of mistakes I made when I first starting trading under funded conditions and how I adjusted. Because rules aren't meant to restrict you, they are there to protect the integrity of your growth.
And while we're on the topic of having you succeed, we'll be guiding you through our current promotion plan, including limited time discount costs, trader support campaigns, bonus capital opportunities, and how to properly qualify and submit rules. We have some amazing response to our promotions, but also some confusion. So we'll be showing you exactly what to do step by step.
From there, we will transition into a discussion on our scale-up plans, which I personally think is one of the most underrated parts of WeMasterTrade's offerings. Many people don't realize this, but we have a structural growth pathway in place. If you perform well consistently, you don't just get payout, you actually unlock higher capital tier. It's not just about getting funded one, it's about evolving into a six-figure funded trader.
And speaking of growth, one of the most powerful ways to build long-term income at WeMasterTrade is through our profit sharing model. This is the heart of what makes us different from prop firms. When you trade on a funded account and generate profit without breaking rules, we share the profit with you up to 90%. But there's more to it than just the percentage. We will explain the full payout circle, thresholds, and timeline today.
Now, I know many of you watching today aren't just traders. You're also educators, influencers, or people with large networks. That's why we're also taking time to explain our affiliate program. And we will do it transparently. We walk you through how commissions are calculated, how affiliate referrals are tracked, and more importantly, what you need to qualify for payout, including a detailed explanation of the two referee rule and minimum funding conditions.
This is especially important because we want all our partners to feel confident and clear about the earnings. We've seen a huge growth in affiliates activity recently, and we want to ensure everyone is promoting responsibly, understanding the term, and building long-term income stream.
So, as you can tell, this is not just a surface level live stream. We dive into everything: packages, rules, promos, scale up path, profit sharing, and affiliate opportunities, all with one purpose in mind: helping you make the most empowered and confident decision possible.
And we want this to be interactive, not just informative. So if you have a questions at any point, please drop it in the chat. Our moderators are watching and we will answer as many questions live as we can. Your voice matters.
And if you are watching this on replays, don't worry. We will leave timestamp and summarize below, and you can always reach out to our team with any follow-up inquiries. Our support team is incredible and they are really care about helping traders success.
To wrap up this welcome, I'd like to say this: WeMasterTrade is not just a platform, it's a commitment to be real traders, to create fair, structured, and scalable pathways for people around the world who are serious about trading as a profession, not a game. So if you're here to grow, to understand, and to take action, you are exactly where you need to be. Let's dive into the journey together. Let's begin. And once again, welcome to the WeMasterTrade live stream. Now, before we dive into packages, trading rules, and promotional mechanics, we want to take a moment to zoom out and offer you the full picture of who WeMasterTrade really is, what we believe in, and why we built this platform the way we have. Because when you put in your trust and your trading into a company, understanding its philosophy isn't just helpful, it's essential. And so, this next segment is about origin, intention, and impact. It's about how WeMasterTrade began, what values underpin the firm, and how those values translate into real tools and outcome the traders like you. And to walk through that, I'm joined, as always, by two people who live and breathe this principle, Ralph and Daisy. Let's start at the beginning.
Thanks, Vincent. To truly understand WeMasterTrade, you need to understand why it was created. Unlike many platforms or brokers that evolved from traditional financial institutions, WeMasterTrade was born with a purpose-driven mission to give capable traders access to capital regardless of their background, locations, or financial situation. And we were founded in 2022 as part of the WeCopyTrade Group, headquartered in Vancouver, Canada, while WeCopyTrade built its name on signal sharing, investor networks, and copy trading tech. WeMasterTrade was designed to serve a more focused vision to identify, support, and scale high potential traders, giving them a pathway to earn professionally without risking their own savings.
And it is important to note WeMasterTrade is not brokers. That's not just the labels, it's a fundamental difference. We don't profit from spreads or commissions. Our success is directly tied to the success of our traders. That's why everything we build, from our instant funding pocket to our profit sharing models, is structured with alignments in mind. We take on the capital risks, we give you a roadmap, and you bring the skill. But we also know that skill alone isn't enough. Which is why one of our funding principles is education first. We don't want traders to blindly follow rules. We want them to understand the logic behind the structures. And that's why we will invest heavily to the WeMasterTrade academies, a training ecosystem built to take you from beginner to consistently funded professional.
And that academy is something special, with courses ranging from introductory trading psychology all the way to advanced risk calibration and multi-asset strategy design. The WeMasterTrade Academy isn't just about theory, it's about implementation. We've designed a curriculum to match the real-world trading environment within WeMasterTrade. So what you learn, you can apply directly to your funding account. And to ensure that our system and content meet global standard, WeMasterTrade is proud to hold an ISO 21001 to 2018 certification, which confirms that our educational products and trader development programs meet rigorous international criteria for quality, structure, and learner engagement.
That certification is a big deal because it shows our long-term commitment to developing traders, not just collecting free. In an industry where many so-called broad firms come and go, WeMasterTrade has positioned itself with real operational stability, compliance frameworks, and internal accountability. We are not here for a season, we are here to help build careers.
And we have seen that commitment translate into the real story. If you visit our testimonial page, you will find traders from Nigeria, Vietnam, Canada, the Philippines, South Africa, all talking about how WeMasterTrade have them not just earn more, but trade with purpose. They're talking about the passing challenge after years of struggling with retail brokers. They talk about finally being able to trade without emotional burdens of risking personal funds. And we have students that become full-time traders. We have women re-enter the finance world after career breaks, and we have young professionals from underbanked region finally access the markets with a funded accounts, and that's the impact. That's what's drives us.
And it doesn't stop there. The WeMasterTrade ecosystem is designed to grow with you. For those who want to stay engaged and up to date, We maintain a regularly updated blog section where our team of experts and educators share weekly insights, trading psychology breakdowns, market reaction, and platform updates. We believe that learning never ends, and we keep our traders informed. But let's talk about culture. What makes WeMasterTrade different isn't just the product offering, it's the community mindset. We actively promote trader integrity, respectful competition, and knowledge sharing. Whether you're in a Telegram group, watching our YouTube series, or engaging with us on a live support, you will see what we actually listen.
And I will speak honestly here, in many platforms, the trader is just a customer. At WeMasterTrade, the traders is the product. Your performance drives the business, your voice shapes the platform, and your consistency determines how far we can scale together. That mutual accountability is rare and is something we are proud of.
And if you ever doubt whether this path is real, whether a trading career is truly within reach, I encourage you to read the testimonial, take a look at our funded accounts, and connect with people who've gone through the system. The story are real, the capital is real, and the results speak for themselves.
To summarize, WeMasterTrade is a capital allocator, a talent accelerator, and education-first trading institution. We are here to challenge the status quo of trading access, to build systems that reward performance over promotion, and to create real, scalable income opportunities for traders around the world, regardless of their starting point. This is more than a platform, it's a trading movement. And if you are ready to be part of it, today's live stream will show you everything you need to know. And thank you, Raf and Daisy, for the deep and honest walkthrough. Coming up next, we're going to take this foundation and connect it directly to our actual offering. That means we will be discussing all the different account packages available at WeMasterTrade, how they differ, who they design for, and what kind of result you can expect from each. Now that we've explored who WeMasterTrade is and the principle we stand for, it's time to move into one of the most essential parts of this live stream, an in-depth discussion on our account packages. This is where it all begins for most traders, choosing the structure that's best aligned with their goals, their style, and their current skill levels. And when we say packages, we're not just talking about dollar figures, we're talking about frameworks. Each package at WeMasterTrade represents a different pathway toward growth, and today we'll walk you through all of them, what they offer, how they structure, and most importantly, who they are designed for.
Exactly, Vincent. At WeMasterTrade, we don't believe in a one-size-fits-all model. That's why we have built two distinct product lines for traders, the Challenge package and the Instant Funding package. Each line includes a variety of account sizes and configurations because we know that traders come with different strengths, risk appetite, and timelines.
Let's begin with the challenge models, a two-phase evolution system built for traders who want to prove their skill before being allocated capitals. It instructs fast and has become the most popular route for new traders entering the WeMasterTrade ecosystem.
In the challenge model, you begin with a simulated account and your goal is to meet specific profit targets while staying within strict but reasonable risk parameters. There are 3 stages in total, phase 1, phase 2, and then the funded stage.
Take for instance our 10,000 challenge, a great starting point for traders who want to minimize upfront costs while building a track record. Let's break it down phase by phase.
Well, in phase 1, you will need to achieve an 8% profit target, which is $800 without breaching a 5% daily loss, $500 or 10% overall loss limit, which is $1,000 max loss. You will have unlimited time to achieve this. That's a key difference from many platforms. We don't pressure you with that deadline.
Once you pass phase 1, you will move to phase 2, where profits target dropped to 6%, that is $600. The risk will remain the same, and here's something unique. In phase 2, you already start receiving a 30% profit share if you exceed the target.
Finally, once both phases are clear, you will enter the funding account where you trade with real capital, have no profit targets, and your profit share comes to 90%. That's one of the highest in the industry.
So this account is ideal for newer traders or experienced traders who want to start with lower pressures and learn the system. If you are still refining your strategies or want to get a feel for WeMasterTrade risk frameworks before scaling, this is a perfect package to begin with.
Now, for those who are confident in their strategy and want to start with a larger account size, we offer 25,000, 50,000, and 100,000 challenge packages. The structure is similar. Two phases, the same 5% daily and 10% total loss limits, but the profit targets scale proportionally.
For example, in the $50,000 challenge, you will need to hit $4,000 in phase 1 and $3,000 in phase 2. While the targets are higher, the leverage remains the same, 1/100, giving you room to adjust position sizing.
The $25,000 to $100,000 challenge is ideal for traders with more capital management experiences, especially those looking to eventually scale into larger funded account. If you are already past other prop challenge or have a strong verified trading history, this is a good step up.
Every challenge package comes with a one-time fee. For example, just 45 for the 10K challenge. This fee is refundable once you become funded and meet minimum performance conditions. And if things don't go your way, you are eligible for 30% reset discount to start fresh. What if you don't want to go through a challenge at all, but instead want to accept real capital immediately and get paid based purely on the result? That's where our instant funding packages come into play.
And this is where WeMasterTrade truly sets itself apart. Our instant funding model is designed to give experiences, disciplined and traders the chance to trade real capital from day one. No evolutions, no demo stage, just pure live trading backed by structures, fair and transparent system.
And what makes it even more accessible is that you can choose from several different account types depending on your style, preferences, and goals. Today we are going to walk you through each of the 5 main instant funding packages: Standard, 51010, 510 51010 no BC, and Customized. We will compare them in detail, but more importantly, we will help you figure out which package is right for you.
Let me set the scene quickly. All of our instant funding packages give you live trading access from day one. That means no challenge phases, no evaluations. You pay once, follow the rules, and you are trading live capital. And every account, no matter the size, includes no time limit, up to 90% profit share, balance-based limit, scale up land toward 1 million, support for EAs, swing traders, scalping, and even HFT. Now, let's go package by package. And as we go, Raph, Daisy, I want you to chime in with real advice. Who should actually choose which one? And what kind of traders you see success with each?
So let's start with the standard package. I always describe this one as the best friend for traders who just want stability. You are getting up to $200,000 in capital with a very manageable 4% daily loss limit and 6% overall drawdown.
It's like a steady account that doesn't put you out to overtrade. That's with the profits split up to 90%. There is serious earning potential even if you're taking a slow and steady approach.
And how about the commission?
Well competitive across the board. Forex at $4 per lot, gold at 4 per lot, indices at 1, and stock at just $0.07 per lot.
As everything is allowed, new trading, scalpings, weekend holding, EAs, XFT, you name it.
So for the audience, if you are someone who trades regularly, understand your strategy, want a full range of assets, and plan to play the long game, this is your sweet spot.
It's perfect for intermediate to advanced traders who already know their edge but don't want to stress with a target-based challenge. And if you are ever had an account blocked due to unrealistic rule, you will find a standard model refreshingly fair.
I would also say it suits swing traders. The 4-6% risk profile gives just enough flexibility to hold multi-day positions, and especially with weekend holding fully allowed.
Alright, moving up a gear, let's talk about the 5-10-10 package. Same capital ceiling, up to 200k, 2100k, but now you get 5% daily loss and a wider 10% overall limit. Why does that matter?
That extra caution is massive for traders who scale into positions or take multiple entries per setup. You have got more room to press, especially in high volatility markets.
And the profit target here is also 10%, which align well with the risk window. Plus, you still get full support for scalping. EA's new trading is very trader friendly.
It's best for day traders, especially those trading assets like NAS, DAQs, or goals that move fast. If you've got tests in the trading and just need some breathing rooms, this is your pocket.
And also for traders who want structures but don't mind having that profit target, the clear milestone motivates some people, especially if they are payout oriented.
Now here's a personal favorite, the 5-10-0. You get 5% daily and 10% overall loss, but no profit target, none, zero.
And that's a blessing for high precision traders. You are no longer chasing a number, you just focus on protecting equity and growing capital slowly and safely.
This one is loved by low-frequency traders and snipper. If you enter 3 to 5 trades a week, this is your space. You are not penalized for patience. You are actually rewarded for it.
Veterans, swing traders, risk-conscious traders, people who prioritize consistency over speed. If that's you, you'll try here.
And let's be honest, not everyone wants to hit targets. Some just want to trade well and scale up cleanly, and this is the harm.
Now for the rule breakers, or rather, those who don't want to be evaluated or how even their profits are. The 5-10-10 no BC remove profit consistency tracking, right?
Exactly, same 5 times risk profile, but you are not required to keep your profit growth smooth. One big winning day is totally fine.
That said, trade copier are not allowed in this one, so it's for manual traders only, and you need to trade responsibly, but for aggressive traders who sometimes hit big smiles, this is the place.
And this is perfect for high risk reward traders or anyone who have issues with consistency rules at other firms. You trade how you want, just keep it inside the drawdown box.
And last but not least, the customized package. This is WeMasterTrade saying, you know what you need? Let's build it together.
You can adjust daily loss, overall loss to your liking, plus you can fund up to $400,000 more than any other account.
It's premium, flexible, and come with all trading style allowed, including EAs, new tradings, weekend holdings, SFT, and more. And this is for top-tier professions, hedge fund trader, signal private providers, high-volume traders, anyone with a very specific structures in mind. This pocket let you build it.
I always say if you try other model and nothing quite fixed, Build your own blueprints with customize. That freedom is rare.
To sum up, every instant funding package we offer comes with a clear risk parameter, fair commission, deep market access, and real profit potential. There are no time limits, and payouts start as early as one day in.
And no matter your strategies, gaming, swing, algo, or manual, there's an account that aligns with you. The key is picking the right one now, so you can start building consistency from the start.
And if you are ever unsure, our team is available 24/7 to guide you. But to the real skill secrets, pick the account that fits your disguise, not your dreams. The right fit always outperform the biggest promise.
Up next, we walk you through exactly how to protect your account, avoid breaches, and understand the key risks and consistency rules that power our entire platform. Alright trader, now that you've seen the packages, let's talk about the part that either makes or breaks your account. That's right, it's time to dig into the trading rules and how to actually stay compliant once you are funded. Because let's be honest, getting funded is exciting, but staying funded, that's where the game really begins. And the number one reason traders lose their account is comes down to one thing, the daily loss limit.
Yes, the rest daily loss is the one rule trader think they understand until this kick them out of their accounts at 3:17 p.m. on a random Tuesday.
But here's the good news. Once you understand how it really works, it becomes one of your best tools for risk control. So today, let's break it down from top to bottom.
So what is the daily loss limit, also called maximum daily loss?
It's the maximum amount of loss you are allowed to incur in both floating and closed trades on any single trading day. If your equity falls below that limit, even for a moment, your account is automatically closed.
And the key things here is the daily loss is calculated from the higher of either your balance or your equity at the start of trading days. That's a really important distinction, and it is what trips a lot of people off.
Let's walk through a live example. Imagine it's the start of day 5. Your balance is 105,000. Your equity, however, is higher, 107,000, because of open floating profit.
So if you are on a 4% daily loss limit, we calculated it of the higher number, 107,000.
So 4% of $107,000 is around $4,000. That means your equity for the rest of the day can drop below $102,000 or boom, the account is gone.
Right. And I think it's important to point this out. The system isn't waiting for a close. It's real time. Even if your trade is floating loss and you haven't closed it yet, if your equity dips below that threshold for even a second, that's it.
Now let's resurface. Say it's the start date of day 7. Your balance is $100,000, but your equity is $19,000 because your open trades are slightly unlocked.
So since balance is higher, we base on the 4% of the initial balance, so $4,000.
So now your equity must stay above 96,000 throughout the day. If it drops to 95,999, auto liquidation kicks in. No warning, no margin call.
And the system will send a market order to close all trades. Everything's liquidated. Your account is disabled and you can't trade again unless you purchase a new pocket.
And here's the kicker, the auto close happens when the system detects the threshold was crossed. But due to market fluctuation, your final P&L might look worse than the actual threshold. That's because the system executes closures based on the price leverage at the time of liquidation.
So even if you only intended to take a 3,900 loss, One slippage spike in gold or NAS DAQ and suddenly it's 42,000. That's why we say don't ride the edge.
Alright, let's talk about how to avoid violating these rules because this is where the pro mindset kick in.
First tip, know your buffer. Never plan trades to take your ride up to the edge of your limit. Leave at least 10 to 15% room below the max loss, especially in volatile markets.
And the tip 2 is check your equities, not just your balance. I can't stress this enough. Most traders stare at their balance all days, but if your floating loss is dragging your equities, you are heading toward violations.
Tip 3. Use a dashboard or tracker. Inside WeMasterTrade, we provide rich dashboard that show your live loss status. Use them, check them. Don't rely on memory.
Also, pause trading after a big loss early in the day. If you have lost 3% in the first hour of London sessions, maybe it's time to stop and reflect, not try to revenge trade your way back up.
And another big one is trade smaller during new hours. If your trading goes during NFP with full lot size, you are practically begging to break the daily loss rule, cut position size, and ride post volatility.
So, what are the top rookie mistakes you see when it comes to daily loss?
Number 1. Over-leveraging. Traders opening positions that are 5, 6, 7% of their account thinking they will close quickly, but if the trade turns red flash, it's already too late.
Number 2. Holding overnight without checking expose. If you hold 3 trades overnight and wake up to a 60 pip gap, the daily loss could be hit before you even open your eyes.
And the third, assuming that close rates are all that matter. They are not. Remember, equity includes both floating and closed positions. The total equity lies in your score.
I always say this to new traders, the daily loss rule isn't your enemy. It's your account airbag. It's designed to protect you from doing something irreversible.
Exactly. It forces multiplies. You can be aggressive, but only within spot. And if you learn to trade inside that spot, you will last longer than 90% of the market.
And one last note, this isn't about rules, it's about trust. WeMasterTrade fund you because we trust that we manage it risk responsibly. The daily loss is there to protect that trust on both sides. Now, before we dive deep into the trading rules, let's take a break and we will be right back. Welcome back, traders. In the review assessment, we covered the daily loss rule, and if you haven't already clicked that one, you are missing out. But now we move from the daily loss battery to the absolute battery. I'm talking about the maximum loss rule, also known as your account stop loss, the line that you can be crossed, not just for the day, but for the entire life of your account.
And this is where a lot of traders misunderstand how the rules work. They think, well, I didn't hit my daily limit, so I'm fine. But when a week later, they are chipped away at their account and suddenly liquidation.
The max lot rules is the last safety net. If the daily loss is your daily seat belt, then max loss is your airbox. If that limit hits, it means the account is deemed unsalvageable under your current trajectories and is closed immediately.
So, what exactly is the max loss rule? Let's define it simply. It's the total maximum amount you are allowed to lose across all trades for the entire account. If your equity, that is, your real-time capital, including open trades, ever dropped below a certain percentage of your starting balance, your account is gone. Period.
And unlike the daily loss which reset every day, this one doesn't reset. It's cumulative. You can lose 2% one day, 3% the next. And if your total loss crosses the line, that's it.
And the percentage limit depends on your package. It typically either 6% or 10% of your initial balance, not your equities, not your profits, but the original number you start with.
Let's walk through a concrete example. Suppose you have an instant funding account with an initial balance of 50,000 and your max lot limit is 6%, which is 3,000.
That means your equity can never go below 47,000 ever. Doesn't matter if you made 1,000 yesterday or the total loss from the highest point back down to that threshold is what matters.
And remember, this rule includes both closed losses and floating losses. So if you allot $2,000 in closed trades and you have another $1,200 floating in rest, your equities is now at 46 and $800,000. That's below the limits and account is closed.
And just to be clear, it's not about the net gain or loss across trades. It's about where your equity stands in real time, relative to that stop loss floor.
So here where it gets interesting and a little tricky. Let's say your account grew to 51,000. Congrats, you are in profit.
But your max lot limit is still based on your original $15,000 starting balance. If your limit is 6%, the threshold is still $47,000. What change is how much room you have to fall before you hit it.
Exactly. You now have 4,000 in total buffer. Because 51,000 minus 47,000 equal 4,000. So your profits give you cushion, but the floor never moves.
Once your equity drops below that maximum lot threshold, even by few dollars, auto liquidation triggers, and all trades are closed immediately as the market price.
And again, like with the daily loss, if there's volatility or slippage, your account might close out below that line. That's just execution reality.
And most importantly, once it's breached, that account is permanently disabled. You will need to purchase a new package if you want to continue trading. No reset, no rollbacks.
Alright, let's get tactical. How do you actually trade inside this rule without constantly worrying about it?
First, track your total close losses every day. You should always know how close you are to your max loss floor. Don't wait for the dashboard warning, calculate it manually.
Second is use your profits as protection, not permission. Don't treat floating profits as a green line to increase risk. Instead, consider locking in gains by reducing lot size when you are ahead.
Third, manage your floating loss aggressively. Even if you are positive overall, a single trade with bull stop placement can take you from safety to shutdown in a few minutes.
4. Stay cool when you are close. If you are down 5% out of your 6% limit, that is not the time to double down. That's the time to step away, pause, and rethink your entries.
And the biggest mistake is underestimating floating drawdowns. Traders close the trade losers and thinks, okay, I still got room, but they forget about the 4 trades floating minus $1,800.
Second, traders who chase recovery after a bad day, they lose 4% in one day, come back swinging the next day thinking they will make it back, and instead take another 2%, boom, violation.
Third, and this one hurts, ignoring slippage during major news. Even with a tight stop, new scandals can get you straight through your limit.
And the mass loss rule is there for a reason. It's not there to punish you, it's there to protect you from yourself. Every successful trader I know sees their stop loss, whether personal or institutional, as a non-negotiable boundary.
Right, it's a reality check. If you are consistently brushing up against your max loss, the problem isn't the rules. The problem is your system or your psychology.
At WeMasterTrade, we're not just giving capital, we are teaching structure. And the mass loss rule is what separates gamblers from professionals. So remember, your mass loss is a percentage of your starting balance, typically 6% or 10%. It's calculated using equity, not balance. It includes both closed and floating losses. And once reached, your account is gone. Coming up next, we will explore the consistency rule and why steady profits matter more than big spikes when it comes to growing, scaling, and getting paid.
If you ever make $5,000 in one day, then make $200 the next 4 days, and wonder why your payout got flat, this segment is for you.
So let's dive into the rhythm of profitability and how to stay consistent under the WeMasterTrade model.
Alright traders, we'll talk about the daily loss limit and we'll just go over the maximum loss rule, 2 pillars of protecting your capital. But now, it's time to shift gear just a little and talk not about risk, but about results. Because here's the thing, it's not just about staying alive in the game. At WeMasterTrade, we want to see traders grow, scale, and actually earn. And to do that, you need more than just a winning day. You need something called profit consistency.
This rule right here, the profit consistency rule, is what separates a lucky spike from a reliable trader. It tells whether you can make money over time or if you are just hoping to hit one big winner and roll the dice.
And more importantly, it's also how we evaluate if traders are eligible for withdrawals, profit sharings, and even scale up. If you are finished and you are wondering why your payout didn't go through, this rule could be the reasons.
So let's define it clearly. The profit consistency ratio is a measure of how even your profits are from day to day. The more balanced your profits, the lower your ratio. The less consistent, meaning you had one giant profit day and then smaller or losing days, the higher your ratio.
The idea is simple. If 80% of your total profit comes from one day, that's not consistency, that's luck or risk. What we want to see is traders who make profit day after day, even if it's small. That's what we can scale.
The formula is really straightforward. take your best trading day's profits and divide it by your overall profits. Since you started the accounts, then multiply by 100.
So the formula is best day divided by total profit multiplied by 100 equal profit consistency percentage.
And just to be clear, best day refers to your highest close profit in a single calendar day, and total profit is the sum of all your close profits minus any close losses or open losses across the life of the account.
Let's say you have the following results over 5 trading days. Day 1 is $100, day 2 is $200, day 3 is minus $15, day 4 is $100, and day 5 is $60.
That means your total net profit across 5 days is 100 plus 200 minus 50 plus 100 and plus 60 equal to $410.
And your best day was day 2. That's $200 profit.
So now we apply the formulas. 200 divide 410 equal 0.4878. Multiply that by 100 and you get a profit consistency ratio is 48.78%.
Now let's say your account requires 20% profit consistency, which is common. This trader is way above that, so they wouldn't qualify for a payout yet.
So even though this trader is profitable, they are not consistent enough. They had one big day that made up almost half of their total profit. That's not sustainable, and that's what we are looking at.
And this is where I really want to speak to traders. If you are relying on 1 or 2 big days to carry your entire account, that's not professional trading, that's volatility. You can get lucky, but you won't stay funded.
And remember, it's not just about your payout this week. WeMasterTrade evaluates your consistency over time. Traders who show long-term balance are ones who get scalped, who get futures, who get shorted with more capital.
Alright, so let's address the numbers. What's an acceptable profit consistency ratio?
Typically, the rule is set at 20%. That means your best day should not exceed 20% of your overall profit. Let's say you are over the limit. Don't panic, you are not disqualified. You just need to keep trading and evens out the curve.
And here's how to do that. First, trade smaller size for a few days. Secondly, take smaller control wins, aim for around 200 or 300 per day. And third, avoid big swing traders that could buy your ratio again. And lastly, spread profit across multiple days, not one monster setup.
And for those using EAs, monitor your equity curve. If your EA is queuing profits heavily into one day, you might need to rebalance it. The bot might be profitable, but it won't buy this rule unless it's configured with buyout logic in mind.
And this is some common mistake to avoid. The mistake one is trader hitting targets early, then taking the rest of the week off. That inflates your best day and leaves the rest of your curve flat.
Mistake number 2, overtrading after a big day, thinking I'm safe now and trying to squeeze more instead of averaging out a high ratio.
Mistake number 3, thinking this rule is just a hurdle. It's not. It's a reflection of what we actually look for in our master trader.
At the end of the day, this isn't about controlling you, it's about building habits that can handle scale. If you can't be consistent with a $25,000, what happens when we give you $100,000 or more?
Exactly, consistency is what makes you safe to invest. As WeMasterTrade, we fund traders, but we also study them. This rule tells us whether you are serious about long-term trading.
And we've seen it time and time again. The traders who respect this rule, they are the ones who gets multiple payouts, referrals, and roll into six-figure funded accounts.
So don't fear the rules, understand it. Use it as a feedback tool. If your ratio too high, great, that means you got profit. Now keep going, balance this out.
And remember, you don't need to calculate it manually. WeMasterTrade does for calculate your profit consistency ratio automatically. You can check it anytime under statistic bar.
To recap, this rule is about balance, not volume. Aim to keep your best day under 20% of your total profit. Spread your wins across multiple sessions. And monitor your progress in the dashboard. We've walked through the daily loss limit, tackled the maximum account loss, and examined how your profit consistency shape your long-term payout and growth. And now, we arrive at the final, and perhaps most overlooked, rule of all. The risk consistency rule, or what we call the discipline test.
That's right, traders often think the biggest enemy is the market, but truthfully, it's inconsistent, especially in how much you are risking from one trade to the next.
This rule doesn't look at how often you win. It looks at how stable your risk is and how professionally you are managing your position sizings. If you are serious about scaling as WeMasterTrade, this rule is non-negotiable.
Let's break it down. At its core, the risk consistency rule is simple. You are not allowed to risk more than 2% of your initial account balance on any single trade idea.
And that includes all losses associated with that trade idea, both close losses and floating losses, even fees, commissions, and swap are counted.
And for some accounts, like the 5, 10, 10 no PC pockets, this rule gets even stricter. There, the limit is 1% per trade idea, not 2%.
Why this rule is important? Because consistency isn't just about the outcome, it's about the process. The more erratic your position sizing is, the more volatile your equity curve becomes. And that makes you hard to scale.
This rule protects both you and the firm. It helps preserve capital, prevent large equity swings, and make sure your edge plays out over time.
Think of that your account hurt best if your position size pull up and down, 0.5 loss one day, 5 loss the next. The system flags is not structured, that's sharp.
This is where it gets technical, but stay with us. The term trade idea isn't just one order. It's a group of trades that share the same logic.
So if you open 3 buy positions on HUD USD gold at different time and they are opening, that's one trade idea.
Because it is the same symbol, same directions, and close around the same time. Even if you open them different time, they are seen as a single, undefined position from a risk perspective.
So the system doesn't look at your trades in isolation. It groups them into logical bundles and applies the 2% rule across the entire bundle.
You can have multiple separate trade ideas as long as each one respects the risk limit.
For example, if you go long on gold, short on GBP, GPY, and short on AUD, USD, and each position has its own direction, and access. There are 3 separate trade ideas, and each one can risk up to 2%.
Let's say you go buy on gold, and then you go buy again and again. You now have 3 open positions in the same direction on the same asset.
Yep. The system treats as one trade idea, so if the combined floating risks are even to a loss from those positions exceeds 2% of your starting balance, and boom, you broke the rule.
Another mistake, opening multiple gold buys, then closing one 10 minutes later and two orders together. The system still groups those trades close within 3 minutes of each order, so be mindful of your close timing.
Let's go hands-on. Suppose you have a 100,000 account. The 2% mark risk per trade idea means you can lose more than $2,000 on any trade idea total.
So you open two gold buys, one lot each. You don't place a stop loss. Nail hits, market drop 100 pips. Each lot loses 1,000. That's 2,000 total.
You are on the line. You are right on the line. If slippage or swap as a few extra dollars, that is rule broken, account flags or liquidated depending on enforcement model.
And on some accounts, especially instant funding accounts with stricter tolerance, this breach might result in loss of funding status or immediate closure.
And here is some tips. Tips 1 is set your lot size based on account risk, not emotion. Know how many pips equal to percent.
Tip 2. Use stop loss order religiously. Set them based on risk per trade idea, not random chart levels.
Tip 3. Don't stack trades without calculating combined risk. Just because one position is below 2% doesn't mean 3 of them are.
Tip 4 is label your trade idea mentally. If you are entering on the same setup, treat it at one, size it accordingly.
Tip 5. If you want to split an idea into multiple entries, do it smart. Scale in smaller, use micro loss if needed. Keep the total exposure below 2%.
And here are some common violations. The most common reason traders break the rules is taking multiple entries on one trade idea and thinking it's still separate.
Second, opening high-risk trades after wins, assuming they are playing with house money. Spoiler, the market doesn't care.
Third, neglecting floating loss. A trade may not be closed, but the floating rate still counts toward your 2% risk.
So why we enforce this rule? This isn't just policy, this is professional practice. Hedge funds follow this, banks follow this, real traders follow this.
Exactly. We're not here to micromanage you. We're here to protect you, your accounts, your capitals, and the integrity of the community.
And traders who internalize this rule, who understand that small, consistent risk is the foundation of scalable capital. Those are the ones we grow. Those are the traders who go from 25K to 1 million.
So if you want to be a professional trader, you have to think like one. And professional traders only know how much they are risking on every trade, every day.
And if you are still getting your lot size, your opening trade because set a field, right? Take this at your size, that will get structured.
This is more than a rule, it's a habit. Build it now, and the path toward bigger capital and larger payouts become way more predictable. And that, my friends, wrap up the 4 essential rules of trading at WeMasterTrade. Daily loss, maximum loss, profit consistency, and risk consistency. Master these, and you are not just staying compliant. You are building a foundation for serious capital management, long-term payout, and scaling. You are watching the official WeMasterTrade live stream, and the best is still to come. Alright everyone, this is it. You have made through the risk rule, the profit condition, and the structure of all our accounts. Now let's talk about why it's so worth it. Because at the end of the day, we know what every trade really wants.
More capital, more room to trade, bigger loss, higher rewards, without ever putting your own money at risk.
And that is exactly what WeMasterTrade scale-up plans is built to provide. It's your roadmap from being a small-scale account trader to managing a $1 million funded account. And it's not fantasy, it's a clear path with defined milestone.
The Scale Up Lens is our performance-based growth program. As you trade well, meaning you hit your target, avoid violation, and demonstrate risk control, we increase your capital allocation. In other words, you earn more room to trade without spending more out of pocket.
And let's be clear, this isn't tied to subscription model or gimmicks. You don't pay for scale up, you earn it through consistency, profits, and discipline.
And the scaling is aggressive. We are talking doubling, tripling, and eventually scaling you all the way to $1 million in funded capital, depending on where you start.
At WeMasterTrade, we offer two types of scale-up plans, depending on your account type. Percentage-based scaling, mostly used for channel account, and the second is amount-based scaling, using instant funding accounts like 10K, 25K, and 50K and beyond.
So let's start with the percentage-based plan. You begin as an evaluation trader level 1 with 100% of your base account, hit the 20% profit target with profit consistency, and you are promoted to level 2 where your capital increases by 50%.
From there, the close explodes. Level 3 is 300%, level 4 is 600%, level 5 is 1200%, level 6 is 2400%, and finally max is $1 million.
Each step has its own profit target, usually 10 to 20%, and some levels require profit consistency, especially in the early stage. Once you beyond level 3 or level 4, the consistency requirement drops, and it becomes all about raw performance and discipline.
So if you start with a 25,000 account, your first profit target is 5,000. Hit that with consistency, you are bumped to up to 37,800,000, then 75,000, then 150,000, on the way to $1 million.
And don't worry, you don't lose your account if you don't hit the target fast. There are no time limits. You grow at your own pace as long as you stay within the rules.
To move to the next level, here's what you need to do. Reach the specific profit target. Avoid all violations, especially month loss or daily loss. Complete at least 2 successful payouts. Maintain profit consistency if required for that stage.
And once all conditions are met, we issue a personalized trading agreement and upgrade your account size.
And the best part, with bigger accounts, you are earning more without increasing your risk per trade. That's real capital leverage. And let me be real for a second. Most common mistakes: overtrading to force the targets, traders push too hardly trying to scale fast, and end up violation drawdowns.
Another one, ignoring consistency in the early level. If you make 80% of your profit in one day, that payout won't qualify. You need to spread your wins.
And of course, not blending your growth. You should know what your next scale target is and trade in a way that prepare for it. Don't just trade for today. Trade for level 7.
And scaling isn't just financial, it's mental. Every level brings more capital, but also more responsibility. If you're stressed trading $10,000, how will you handle 300,000?
Exactly. That's why the scale up is step by step. We set your priorities that display your patience long before we hand you 7 figures capital.
And that's what makes real trading. Alright traders, before we end this incredible session, we want to bring everything full cycle. Because today wasn't just about telling you how WeMasterTrade works, it was about showing you what it means to trade with clarity, with capital, and with confidence.
And we walked through platform payouts, but now the jump back out and ground ourselves in what the world is doing today. The market isn't pausing, and the news keep coming. As a fund trader, your edge come from staying prepared, not just with startup, but with context. And the economic calendar analyst on today's is Thursday, July 8th. Hey trader, welcome back to daily macro rundowns. It is Tuesday, July 8th, and we got trade statement, confidence exceeded, and trade balance coming in bout.
Exactly, lots of Aussies and Japanese data early on, followed by some US and European releases later today. Let's break it on down. And for the Japan early section highlights, the bank lending year over year 2.8% better than 2.3% forecast. Current account 2.82 trillion beat forecast at previous. Economy watcher sentiment 48.0 slightly below forecast. Japan kicked up strong. Both bank lending and current account came in better than expected.
Yes, that's supported for GPY, showing strong capital inflow and steady credit growth, but the sentiment grading as 45.0, so consumers still feeling cautious. Australia's AUDs are BA days, NAB business confidence finds increase from 2 cash rate in health at 3.85%. RBA statement and press conference. Big day for the Aussie dollar. The RBA held raised at 3.85%, which were expected, but the key takeaways is in the terms of the statement.
Exactly, and the NAB business confidence jumped from 2 to 5. That's positive sentiment for the Aussie's economy, but the real market mover was the press conference, and anything on future high occurs will guide AUD volatility. And for the Europe, trade balance focus. German trade balance 18.4 billion beat focus and previous, while the French trade balance is minus 7.8 billion. The Japanese trade balance surged to 18.4 billion, a strong signal that exports are holding up despite global slowdown worries.
France, on the other hand, stay in the red at minus 7.8 b. No surprise there for EU or USD traders. This clean slightly bullish for the euro in the short terms. And in the USD and FIB Small Business Index, actual E98.7 with previous E98.8. The NFIB Small Business Index dips slightly but still steady at 98.7. Not a huge market mover, but it keeps the narratives of gradual economic resilience or growing.
Exactly, still holding near multi-month highs, supportive for equities, slightly neutral for USD. And the last event is Canada IV PMI. Canada's IV PMI came in at 49.1. That's just below the expansion threshold of 50, but an improvement from last month.
CAD could see a small bounce on this, so come some underlying strength in private section. So if we have to pick the highlight of the day, is here is RBA health rate, but business confidence is rising. AUD slightly bullish. GYP strong current account and lending. GYP is supportive. Germany trade balance is cross forecast. Midly EU are positive, and USD and CAD store stable but unspectacular data.
That's right, today was more of a macro posture day than a shocker. So if you are trading forex pairs like AUD or USD or Euro, Japanese yen, there's still plenty of technical setup to take advantage of. So finally, stay sharp, manage your risk, and we will catch you in the next market section. Thank you for joining Live Market Check-in.